Could President Duterte's fresh tirades against the European Union and the U.S. have long-term economic consequences? That question was once again top of mind after Duterte threatened to cut diplomatic channels and expel European ambassadors within 24 hours. Duterte has found himself one ally at least. Malaysia's longest-serving Prime Minister Mohathir Mohamad, who was in Manila for a forum recently, says he has been in this position before. And despite being branded as a recalcitrant leader by the West, he said foreign investments never stopped coming into Malaysia.
I was always very critical of Europe and the Western world. I like to say things which are nasty. I even boycotted Britain for some time. But the investments came in. Why? It is because the investors, the business people, they want to invest and make money. They don't care about your politics. Provided you give a country that is stable, then the rule of law applies, they will come.
Mohathir says investors look to where they can profit, and as long as a country is stable and provides incentives to businesses, investors will continue to come.
You have to deal fairly with them. We give them incentives, no tax for 10 years, for example. And this kind of thing attracts them, and they ignore what you say about their country. They want to make money in our country. And because of that, I got away with a lot of things. You know, I say nasty things. I was called a recalcitrant and all that.
The local business community are putting on a brave front, saying investors are used to the president's rhetoric and have learned not to take it as policy necessarily.
The existing investors, the companies that are already here, have gotten used to the president now, and they realize that his tirades are just that. They don't necessarily result in a political policy change or anything like that.
When we talk to our clients, they're very positive, they're continuing to invest, they're continuing to borrow. Because if they didn't believe in the growth of the country, they will not borrow because they'll be saddled with debts. But they're taking advantage of that. That's from the loan market.
Wallace and Francisco point to the fact that Philippine economic fundamentals remain strong, which he says is what will keep the FDI coming.
The ones who will miss the boat are the foreign companies. Because the last few years, how many hundred foreign brands have come in? They're the ones who are trying to catch the wave in the Philippines because they want to participate in the rising income, the liquidity here.
Just a week prior, Senator Frank Drilon grilled the National Economic and Development Authority about Bangko Sentral data showing that new foreign equity placements have shrunk 90% to $141 million in the first 6 months of 2017 compared to a year ago. For former Malaysian PM Mohathir, what's more crucial is that ASEAN and China iron out the way forward on the territorial disputes in the South China Sea.
We need to come to terms with these overlapping claims over the waters. And we have to ensure that our waters are open to all kinds of shipping. And we don't want to have confrontations like having the US 7th Fleet coming here, and then the Chinese, to counter that, will build more aircraft carriers, and then they have a confrontation. If they fight, you know the story about two elephants fighting and what happens to the grass will be the grass.
Beverly Natividad, Bloomberg TV, Philippines.
President Duterte says he's not in a hurry to resolve the South China Sea dispute and threatens Western nations again from interfering in his war on drugs. Miners oppose Environment Secretary Roy Cimatu's proposal to increase the excise taxes on mining firms, warning that it could drive away potential investments. Cebu Pacific launches a new hub in Cagayan de Oro City as the budget carrier scrambles to open up new routes in the region. And Bloomberry Resorts Chair Enrique Razon says they're on track to start constructing a new casino in Quezon City despite opposition from residents. President Duterte sees no need to rush a resolution on the South China Sea conflict. Speaking at the high-level forum on ASEAN at 50 last night, he told the audience composed of diplomats and foreign policy experts that he is open to sharing resources in the disputed area.
I hope that ASEAN will grow strong and solve the problems of the serious problems confronting us. The South China Sea is one, but we are not in a hurry. And as a matter of fact, what we did was really the correct step, and was to avoid confrontational talks with almost all of the parties concerned. Just ask for a limited time to solve the problem, and sharing of the resources, if it could be done.
Come November, he will challenge fellow ASEAN leaders to boost trade within the region using the EU as a model. The president also went off script again and opened his keynote with a warning to Western nations, though he didn't specify who this time.
To Western world, please do not impose your will on us. Do not derogate our sovereignty by lecturing on us the civilities of a country which we termed a democratic state. It is not maybe to your satisfaction that you do not like what we are doing, but you know, there are things which we have to do because we have to do it. Or not, then you can do it for us. You know, guys, we have the United Nations. If you think you have qualms against me, go to the United Nations, make your representations, state your complaint, and ask the body to investigate us for being a member of that organization. Do you really think that Russia and China would go for it? Expel the Philippines? One vote from either of the permanent members would goes kaput.
When he finally read his prepared remarks, Duterte called on ASEAN to focus on the issue of piracy in the Strait of Malacca. But he had a slip of the tongue and ended up dragging Malaysia into it.
I think that has to stop. I just finished the war in Malaysia, then perhaps I can refocus the entire armed forces to deal with this problem once and for all. There is one thing I can just offer. Blast them out of the seas to keep our shipping lanes open and safe.
We imagine he meant to say he's just finished the war on Marawi, not Malaysia. Moving on now, Foreign Affairs Secretary Alan Peter Cayetano was at the same forum wherein he confirmed that all new grants from the EU will be rejected on President Duterte's orders. That's even though it's been clarified that the group of EU socialists who criticized the war on drugs does not represent the official EU mission. Cayetano now has to formally communicate this to EU Ambassador to the Philippines, Franz Jessen. In defending the decision, Cayetano insisted that grants from other countries don't come with strings attached.
Pagka yung grant, may strings attached. Pagka yung grant, may mga agreement na pwede kayo makialam sa politika namin, it's more damaging than helpful. So if you look, for example, at the pending grants ngayon, kung titignan mo yung wording, it's one-sided in favor of the EU as far as being able to cancel it. Then number two, sila lang ang meron ding kung anong hinahanap nila sa pagtulong nila. Samantalang there are many other countries now who are giving us grants na wala ng agreement. It's just a question of we will accept it. I don't blame the President in drawing the line. Like sa Marawi, India, Japan, China, Russia. Diba? The 3.5 billion na binigay na ng China sa atin, lahat yun, walang nakatali, walang usap. Yung binigay sa atin ng Japan, sa atin Coast Guard, and yung mga projects na binibigay ng Japan, walang agreements. US depende. May mga ibang agreements na may department to department na signatures and parameters. But marami din na walang strings attached.
Let's get up to speed now on other headlines. The Chamber of Mines of the Philippines is warning that increasing excise taxes on mining firms may discourage future investments. The group was reacting to Environment Secretary Roy Simatu's comment that the current 2% excise tax is too small.
This is studied before. There were some proponents before to increase the 2% to 5%. But umaangar rin ng mga mining government. That's ano naman yan eh. Pero we have to really find out, and these are the things that we have to plan properly. My bottom line is that it should define the wish of the president for responsible mining, make sure that the proper taxes will be given.
Simatu will bring up the issue to the Mining Industry Coordinating Council, or MICC, which will meet on Tuesday next week. The chamber says requiring miners to pay more may result in financial losses. That's because they're paying a host of other taxes on both the national and local government levels, aside from the 2% excise tax.
Baka nakikita lang ng karamihan ay the gross. Malaki talaga ang gross revenue. Kumbaga, malaking pinagbentahan. Ang hindi nakikita ng karamihan, malaki rin ang cost of operations. We've looked at the historical records of the Mining Act, no? And the 2% was parang it was considered by the experts as a fair share for government. Kasi pag tinutal mo lahat ng taxes plus the 2%, nalabas siya parang 45% of revenues ang share ng gobyerno eh.
The country's balance of payments position reversed to a surplus for the first time in 5 months. The gauge came in at positive $24 million for September, narrowing the year-to-date deficit to below $1.4 billion. That's still almost 3 times the BSP's projection of $500 million deficit for the entire year. Monetary officials expect the country's external payments to remain under control, supported by remittances and outsourcing revenues. And Chinese electronics firms are looking into locating into Philippine economic zones. Socio-Economic Planning Secretary Ernesto Pernia says a couple of Chinese firms are considering setting up facilities in the Clark area. Discussions are preliminary at this stage, but Pernia says there are also talks of possibly creating a whole new industrial zone exclusive for the Chinese.
It will be the government, and then, with the Chinese committing, bringing in locators there to make sure that it is worth the cost of the infrastructure for that industrial park.
So we pause for a very short break for now, but still to come. Cebu Pacific cranks up the competition, opening up more routes to connect Mindanao to the rest of the Philippines and even Southeast Asia. A chat with President and CEO Lance Gokongwei next. The bigwig Blueberry Chair Enrique Razon says opposition against their Quezon City casino means it's a good investment. Those stories coming up. Back on Starting Gate, I'm Regina Lay. Cebu Pacific is opening a new hub in Cagayan de Oro City. The airline connects the city to 8 domestic destinations. Laguindingan Airport will be the budget carrier's 7th hub in the country. Now, Bev Natividad caught up with company CEO Lance Gokongwei, who says Cebu Pacific is working with authorities to finally service the Zamboanga-Sandakan route.
We're working with the local government and regulatory authorities to make sure that everything's in place to allow that important connectivity between Zamboanga and Sandakan.
What major challenges, if any, operational details that you needed to iron out that caused that delay?
Basically, we're working with the regulatory agencies just to make sure that everything's in place for a successful launch.
So is there a new timetable for that?
we'll announce it when we're ready.
So yung sa BIMP Iaga, are you still pursuing new routes to be able to pursue a seamless connectivity in that area?
Sure, it's important. I mean, connecting Mindanao with the rest of the world is important.
What new routes are we looking for in that?
We're starting flights between Cagayan de Oro, Laguindingan with Katiklan and Dumaguete, and that's in addition to the flights we already have between Cagayan and Cebu, Bacolod, Iloilo, and Davao. No? So you can imagine that when we started 20 years ago, we were just only flying Cagayan to Manila, and now we're connecting Cagayan to 8-9 other domestic cities, and hopefully in the coming years, connected to the rest of the world.
Everybody is talking about Marawi. Any plans from your end to contribute to that?
Yeah, we'll do our part. We're all very proud of us Filipinos that we've been able to successfully, the president and the armed forces have been successful in reclaiming Marawi, and the entire business sector will help in the rehabilitation and job creation there.
Philinvestland is gearing up to expand its presence in Mindanao now that the Marawi crisis has been contained. The developer is investing 5 billion pesos over the next 3 years to grow its economic housing brand, Futura. It's also building medium-rise buildings in the region under the Spatial brand. With the government shifting its focus to rebuilding Marawi, Philinvest is also lending a hand to the city's rehabilitation.
We still continue to do our housing in Mindanao because we're really all over. We're in Davao, Cagayan de Oro, Tagum, in Coronadal. So we're all over Mindanao. Actually, our company is involved in helping the Marawi rehabilitation. We're working with the NHA to provide the water system. Yes, for the housing component.
Meanwhile, Bloomberry is pushing through with its casino in Quezon City next year despite opposition from residents. A group who called themselves Concerned Citizens of Quezon City appealed to President Duterte to block the development of casinos, fearing the risk that gambling poses to the city's youth. Quezon City lawmakers had also conducted consultations on how to further regulate gambling in the area. Bloomberry is set to build its second casino on a 1.9 billion peso property on Vertis North. Company executive chairman and CEO Enrique Razon had earlier said that the new casino would be more similar to Solaire, which has a mix of retail and dining options.
If we were to make an investment that had no opposition, we would not make money. Oh, siyempre tuloy. Pag hindi magandang project yan, wala mag-oppose na. 2 years construction.
Starting when?
Starting next year.
Well, the PSC continues to test new highs, but no one said it was going to be a bumpy ride on the way to 8,500. So how might the local bourse fare on this last trading day of the week? Well, for more on the markets, I'm now joined by Willie Agregado. He's the president of VC Securities, and he's with me live in the studio. Willie, thanks for joining me this morning. Look, it's been a shorter trading week. The PSC managed to make a run at 8,500 earlier on, and we've seen these 100-point swings up and down at the moment. As brokers, what are you seeing on the floor? Why have the markets been moving quite dramatically, for lack of a better term, in the last couple of trading days?
Probably because we're looking at the end of the year figures, so probably people are positioning their shares on the up to the last quarter.
I see. But I mean, are people on the markets or on the floor, is the sentiment still strong that the PSC could actually breach 8,500 or still extend the recent gains?
Yeah. A month ago, I was interviewed. I said it's about 8.3. I predicted 8.5 for the last quarter. And I think it will still go up.
Okay, so we're close to 8,500 at the moment. Do you think there's still room to actually move up, or do you think this is as good as it gets for us?
Probably for the quarter, it's 8,500.
8.5 ended. All right. So look, we've seen this uptrend for the PSE, but we also noticed that volumes are starting to look thin once again. And again, it's been quite touch and go for most of the last 2 months. Volume still a little, appetite still a little bit, I guess muted, for lack of a better term. Could this actually perhaps provide some headwinds for the PSE heading into the open today?
Yeah, probably people are positioning already for the next year at looking at 10,000 figures for me.
I see. Okay.
I see at 10,000 next year.
10,000 next year.
Yeah.
Oh wait, so you're actually looking at the PSC perhaps testing 10,000 levels next year.
Yes.
How soon do you think this might actually happen, and what do you think it's going to be contingent on?
Because of a lot of economic prospect of the Philippines, like the PPP, the influx of foreign investment, the ease on the capital acquisition. So probably this will be the one that will be pushing the market to the 10,000 figures.
Now, okay, so 10,000 might be is a target, but how do you think we're going to need foreign funds to really reach this particular target? Because we've seen foreign funds actually being a little skittish as of late. In fact, we saw about them selling about $9 million dollars worth of PSE shares yesterday.
Yeah, but eventually they will always come back. But imagine at the rate we're going, it's mostly dominated locally, so probably when they come in, it's still going to up.
I see. Okay. Look, Rudy, perhaps you can help us enlighten us. There was one sector that had a convincing run on Thursday, and it was the banking sector. They led all other counters by a sizable margin. And when you look at how the banks did across the board, you're seeing some pretty a convincing strength across most of our banks. Only East West Bank actually taking a bit of a step back. But apart from Metro Bank taking full control of their credit card unit, there's no real strong, I guess, no concrete reason for this across-the-board move up for most of these banks. Do you have any idea as to why the banking sector had such a strong outing on Thursday?
I think even for the last quarter, the banking system will still be going up because normally end of the year figures are good for the banking system. At East West Bank was earlier not that much, but because it already hit its figure a few months ago. Mm-hmm. It went up already. Okay. So probably people were just doing profit taking on that East West Bank.
Okay, but with regards to the rest of the banks, what do you think? Why do you think there's been such strong, I guess, a strong vote of confidence from the markets with regards to offers such as Metro Bank, Security Bank, and even some of the second liners like RCBC?
On the banking sector, last quarter is there's a lot of spending, so people spend a lot, and again that normally banks are they need a lot of good figures for their. I don't want to say. This window dressing, not that much, but banks are normally good at the last quarter of the market sector.
Okay, so the banks are doing well. We have to talk also about how the miners are doing. October, when you look at how the mining and oil counters done, October hasn't been very kind to the mining and oil sector. You're actually seeing it seeing significant dips since the start of the month. Now, we also have news that DNR Secretary Roy Simatu says that they absolutely have to raise the excise taxes on mining. Right now, it's at about 2%. Do you think this will actually, this could impact or hurt the mining counter as badly as, say, the closures and suspensions under his predecessor, Gino Lopez?
I don't think it will hurt because mining is a good industry. We're still new in the mining, and there's a lot of market for mining outputs.
Okay.
So I don't think that taxes would eventually affect the mining industry.
Any particular subsector in mining? So do you think the nickel mines are going to do better? Do you think Semirara is going to continue to carry the sector?
Semirara is one of the best mining sector. Though they're into coal, it's for power generation. I still bet that Semirara is a good one, okay, especially with the production output.
Okay,
and
great.
The world market price.
Interesting insights. All right, so the mining counter perhaps being more resilient than we actually give it credit for, and definitely watching out for the banks. We'll have to leave it there for now, but Willie Agagad again from VC Securities, thanks again for joining us this morning on Starting It, and thank you for your insights on how the markets might move today.
Thank you very much.
We're going to pause for another quick one, but right after this, Tycoon Lucio Tan denies supporting any destabilization efforts against President Duterte. More on that story coming up.
Welcome back to Starting Gate. I'm JP Ong. President Duterte confirmed he fired an undersecretary of the Budget Department over corruption charges.
I tell you, I do not like corruption. I just fired the undersecretary of DBM, Office of the Budget. I was lucky because there were so many people. I wanted to slap him. I even stood up to, wanted to keep him in the face. Fired him for corruption.
While he did not name the official, Philippine Star sources say the president fired Gertrudo De Leon, the DBM Undersecretary for Legal and Liaison. Budget Secretary Benjamin Diokno confirmed to the Star that one of undersecretaries was fired but declined to elaborate. Diokno says he won't replace the removed official because another USEC is returning from study leave soon. Meanwhile, the next DSWD chief could be Senator Loren Legarda. A Philippine Star source within the Social Welfare Department says they're just waiting for a formal announcement, but Legarda's name has been going around the agency. Legarda told the Star that the position was not directly offered to her, and she plans to finish her term, which ends in 2019. Undersecretary Emmanuel Leco currently serves as DSWD officer in charge after the commission appointments rejected Duterte's pick, Judy Taguiwalo. And the Justice Department dismissed former Customs Commissioner Nicanor Faeldon's motion to junk the drug and criminal complaints against him over the 6.4 billion peso shabu shipment. The case was filed by the Philippine Drug Enforcement Agency to the DOJ, but Faeldon argued jurisdiction should be under the Office of the Ombudsman. Faeldon has submitted a counter-affidavit, while the DOJ panel is now proceeding with a preliminary investigation of the charges.
Well, investment inflows into the country is sharply in focus lately amid worries over the impact of President Duterte's rhetoric. For some insights, we bring in Euben Paracuellas. He's a senior economist at Nomura, live from Singapore. Euben, always good to have a chat with you. Thanks for joining us again. For FDI, I want to kick off with that. That's a bit of a sore point right now, but first let me recap the numbers, okay? So January to June, which is all the data we have right now, overall net FDI is down 16.5%. Debt is also higher and more worrisome. New equity capital, that component alone has plunged more than 80% year to date. What do you make of these numbers?
I think, Red, good morning. Highlighting just the year-on-year numbers is a little bit misleading because we know in the last year we've had a lot of inflows related to the banking liberalization, particularly in April. And it could be chunky. So if you strip that out, I think growth is not too bad, right? And if you look at it on an underlying trend basis, it is pretty clear that it's still going higher, even though we have all of these political noise that have persisted. So I still think the fundamental driver of that is really, investors focusing on the reform momentum. This is an economy that's growing very fast. In fact, one of the fastest in Asia. It has a large domestic market and a good demographic profile.
So ignore the year-on-year numbers, Euben, is what you're saying, and just focus on the uptrend, which is still headed in the right direction. Is that right?
That's right, yeah. I think that's a very clear trend. And again, focusing on just the equity capital portion, that's just one component of FDI. In fact, what we've seen in the last 2 or 3 years, it's actually the debt component that's being the big driver. So these are lending of foreign companies to their local affiliates for business expansion and investing more in operations. So these are inflows as well, and it so happens that this is much bigger in the Philippines than equity capital.
Let me broaden the question out a little bit, Yuben. As far as you guys can see, looking ahead, will the president's threats against the EU and sometimes the US turn off investors? I mean, most recently he's decided to reject all new EU grants, saying that these come with strings attached. What do you think the implications of that are?
Yeah, that's always something that will grab headlines and obviously not very helpful as far as investor perception is concerned, particularly those that are based offshore. But as I said before, it's really not just the political outlook that drives their investment decisions. I think there's a whole lot of other things, business considerations, you know, the reforms, and again, in relation to what the Philippines is doing with the other potential FDI destinations in the region. And again, we just did a big report on that front. And, you know, along with India and Indonesia, Philippines really stacks up as one of the next FDI magnets for Asia as far as, you know, these indicators are concerned.
And as an FDI magnet, where's the interest focused on right now? Are there any particular sectors that are looking more appealing to overseas investors at this stage?
Well, the most obvious one would be infrastructure, and I think there's a lot more scope for that to be expanded, you know, with the Japanese and kind of Chinese investment that are coming through and leading the charge a little bit. But beyond that, you know, the consumer-related sectors obviously are a natural destination for the Philippines, given that it's still a very consumption-driven economy. The middle class is growing, incomes are growing, and inflation is really, you know, very benign. So I think purchasing power is rising, and therefore, for consumer-related sectors, that would be also an attractive destination.
So infrastructure and retail looking very interesting. And in fact, Yuben, there's talk at the moment of opening up more sectors of the economy. We've heard retail, construction, telcos from NIDA, from the Economic Board, and it's planned to, the board has actually promised to issue a revised foreign investment negative list by the year end. So you do think this is going to be a game changer?
Oh, that's no doubt a very important step. And as I said before, a lot of the, you know, factors that's hampering FDI inflows are actually regulatory. And to the extent that the authorities are, you know, liberalizing some of that, I think that would be a great help. We've spoken to a lot of these, you know, FDI type of investors in Japan and elsewhere, and obviously they see this as a, you know, a game changer, as you put it, and gives them a lot more of a mandate to actually go into these sectors and bring in capital.
Yuben, what needs to happen here? Do you know, at the moment there's a restriction that foreign investors can only own up to 40% in certain restricted industries. What needs to happen? Do we need to take away that entire limit, or easing up just a little bit, like say taking it down to 30%, or rather taking the limit up to 70 or even 80%? Will that change things?
Well, I think, first of all, you know, there's some constitutional limits. So there's some sectors really that foreigners are not able to invest in. But the foreign investment negative list is quite long. I think, in fact, one of the longest in the region. So I think there's a lot of scope without changing the constitution to change the regulation and shorten that list. And, you know, things like infrastructure, construction sectors, utilities, even education services. So there's a lot of these sectors that don't really need that protection anymore, and, you know, can compete with foreign players, or in fact could welcome sort of tie-ups with more foreign partners. So I wouldn't necessarily say that these sectors would have to, you know, bring down the limits from 100 to 0, but maybe anywhere between, you know, 40 to 50 would be acceptable at the initial stages.
Now, lastly, Yuben, before I let you go, I want to talk a little bit about tax reform. When you look at where the tax bill is sitting right now, and the Senate has already missed its deadline to get it passed. There's major discrepancies about the revenue projections between the Senate and House versions, which means ultimately that the horse trading will continue. Does it worry you looking at all of that?
I still think they're not too far behind schedule. I still believe that eventually this will be passed before year end, and they have some time. In fact, I would say that the Senate delay, to the extent that they're actually changing some of their provisions that make it closer to the Congress version, I think that makes the BICAM sessions a little bit less tricky and therefore faster to pass. So again, I'm not so worried that they were not able to pass it before the break. I think it is trying to kind of reconcile already some of their provisions.
Thank you very much for your insights once again. Yuben Paraquelia, Senior Economist at Nomura, coming to us live from Singapore. We're going to pause for another quick break, but right after this, it's going to be a busy fourth quarter for Philippines Air Asia as it opens up 3 more routes. President and CEO Dexter Comendador tells us about the new destinations. You're back on Starting Gate. I'm Regina Lay. Philippines Air Asia is launching more flights to ASEAN next year. It's also gearing up for its delayed IPO. Bim Santos caught up with company president and CEO Captain Dexter Comendador, I should say, who says the airline is eyeing flights beyond the region once it opens up its hub at Clark International Airport.
We'll be launching our Ho Chi Minh flight in Vietnam this November 17, and then in early January we will be launching Bali and Jakarta. So we are positioning ourselves firmly in the market as the truly ASEAN airline by completing the connections from the Philippines. We're the only Asian airline right now that operates in these 10 ASEAN countries and into the small areas within ASEAN. Of course, this firmly completes the foothold of Air Asia in ASEAN.
Other routes, sir, are you planning to open by, I don't know, by end of this year and perhaps by next year?
By next year, when we've established our hub in Clark, we should be flying the usual route that we left behind before in July 2013. So the natural routes we should be going to are China and Korea, then completing more of the destinations to Hong Kong, Macau, Singapore, Kuala Lumpur, Kotak, Kinabalu. These were the routes that we flew before we temporarily left Clark. So we're going back to Clark. We'll establish it as a base, and then we'll fly internationally from there.
For 2017, how's your performance so far?
So far, it's going to be a better year than 2016, a lot better than 2016. We were able to expand our capacity by 40%, and we will be doing it increasing it by another 40% in 2017. We're very optimistic of the market.
You said about you're expecting 13B this year?
Yes, as targeted, we will be meeting what we targeted. We are on track, very much on track.
In terms of fleet, how much did you expand this year and plans for next year?
We increased capacity by 40% this year and another 40% next year. So we should be ending the year at 17 planes from about 13 planes. So next year we should be around 24 planes. And then another 70 planes by the next 15 years.
How's the IPO plans coming along? It was deferred to next year?
Yes. It was deferred by second semester next year. we needed more time to work on the papers and everything.
Are oil prices a concern this year?
Majority of Philippine startups are still confident about their prospects over the next 12 months, but a lack of funding could be holding back innovation. Let me bring in Bing Santos again for the story.
Local tech startups continue to grow, are optimistic, and are looking to tap overseas markets even while facing a host of challenges. That, in a nutshell, were the findings of the 2017 Philippine Startup Survey conducted by Isa Lipana and company PwC Philippines. In a survey that covered 106 respondents from the startup community, an overwhelming number said they were bullish on their prospects for the coming year, while over half have overseas aspirations.
These startups are not looking at the Philippines only. They're looking at regional, and very soon they'll be looking at global.
In terms of challenges, majority tagged access to capital as a primary roadblock. Regulatory requirements were also a sore point. With no less than 66 regulatory and oversight agencies, the Philippines has among the highest incidence of red tape in the region. And while the country continues to lead the region in GDP growth, startups say general business conditions remain a key challenge. For Philippine startups, access to financial resources once again came out tops on the list of things holding back innovation, even though billions of dollars in private equity and seed capital are pouring into Asia. More than 81% identified financial constraints as their foremost challenge, with lack of talent a distant second. The hope is, as more small ventures gain commercial success, more investors will likewise be emboldened to invest in riskier, fledgling enterprises.
The financing issue that they have, I think it will take a lot of time for that to get addressed, because investors are normally, a bit risk averse.
We need more success stories. That's what the key is, to inspire other entrepreneurs to start businesses.
The government, for its part, through the Department of Trade and Industry and the Department of Science and Technology, aim to continue providing venues for startups and foster industry linkages.
We focus on the environment and providing them opportunities in their growth, in their operations, in the way they operate their day-to-day transactions. So it's more on the environment.
Tirado said they're also lobbying to push for legislation that will help startups, such as a startup bill pending in the Senate that offers tax breaks and other incentives, along with the creation of a 1 billion peso venture fund. Bim Santos, Bloomberg TV, Philippines.
A quick overview of the markets on this last trading day of the week sees the PSE continue to at least take a back seat or step back right now. The main index down by about 0.5% to 8,442 points. We're only seeing service and industrial so far in the green at the moment, but everyone else really pointing at another correction, or at least a sluggish start to today. But I want to focus on the peso because we haven't really touched on how the local currency is doing at the open. Take a look at how the peso is doing at the moment. You'll see that the peso is actually showing yet more weakness today, 51.56 to the dollar, and you're seeing that the 1 month forwards are also trading at about 51 pesos as 71 centavos. There seems to be a lot of pain and a lot of turbulence in the forex markets again, and we'll continue to monitor how the peso does as Friday continues. But that is your first snapshot of this trading day. Follow us on Facebook and Twitter at Bloomberg TVPH. I'm JP Ong.
And I'm Regina Lay. Thanks for watching and have a great weekend.